Good morning, traders. It's E from MarketWizards.com. About 20 minutes after 11 on Saturday, 20th of April, 2024. Reminding traders to use risk capital you can afford to lose. All right, I want to take a look at a couple of things. First of all, I'm looking at this for my own personal benefit, and anybody else that wants to use this as some ideas for themselves, great, but it's obviously not intended to be investment advice. I'm tracking the pattern here, that spider pattern that looked very good on the E-mini S&P, but not as good on the NASDAQ. And we noted that we were going sideways. And really, until we got to this bar here, we were still fairly neutral. We were hugging the line there, the failure line. And all of a sudden, these last 6 days completely have changed the character and got into what I would call the reversal territory. Doesn't mean you can just keep plunging, but certainly it calls into question that pattern. So that pattern is negated. The most important thing is to be able to identify when a pattern fails, because once it does, then you are looking for other things, and those other things would be hitting bounces instead of trying to buy the pullbacks. So this market needs to prove itself all over again. And the big difference now is once the character changes, you're looking for those bounces and saying, I want to hit the bounces and come south side to find where support is. Here's a chart just showing the all-time high and the pullback and what the damage that has been done. Really, if you want to measure it, this was back on, and we've got about a month here for this trajectory that has reversed itself and come all the way back here. And this location, this 125 was so key. And once we lost that, this was very sharp, fast acceleration to the downside. And I'm sure it caught a lot of traders off guard that just didn't expect that we could do this. And this just shows that once you get this pattern of a knife that's falling, you need to be very careful about making the assumption, and that some traders had said it's easy, just buy the pullbacks. And I said, well, one way to look at it, but once we reversed, that policy had to be reversed, and most traders have not understood that. And now it's okay, let's just close our eyes, it's time to buy again. Well, maybe it is, maybe it isn't. We're going to let the market tell us. And at this point, we're looking at a yearly chart. We had almost achieved target 2, failed at that 09 area, never could get those next 60 points or so. The market chopped and chopped, and we can see that chart right here, sideways. All these were going sideways, and then, of course, the trajectory starts down. And if we're looking at this chart, we can see once we broke this was a pretty important support, in my opinion. And once we broke that, we're relying on the next one. And this is a 50 back. This is a 50% pullback here. So I made the remark that, okay, we're in a 456. Once you get into the 4 territory, you don't know whether you're going 4 or 5 or 6. And it turns out we've gone at least 60% pullback. That's pretty significant. And we can see once we lose these moving averages and we get under the blue slope line, this applies just like all the other work that we do looking at our 5 and 10-minute charts and whatever. And all of a sudden we're saying, wait a minute, we really are testing the breakout, okay? Because this was last year's high at 165 and a quarter, based on merging your contracts the way I do it. And then this year's open right here at 019 is obviously going to be very important coming forwards. So this would appear to be our next support idea back here, this bar, and we are still searching for support. So can we get a bounce? Yes, but my guess is we will still get another pullback. Typically, you will test these areas, and it's just a matter of time. And then this is when everybody jumps in, closing their eyes, say, okay, we're going short. And that's when you'll perhaps get that snapback bounce. So we're going to take one level at a time, and that's all we can do. So for now, we know that we have rejected that. We need this to dig in and hold and start to come back up and start to retrace. And these areas will be first suspects, obviously, where we had these breaks. And those would be retests. And here's a 10-minute chart. Called out to the traders in our group the other day that I thought we were using a 10-minute chart. And the reason I liked the 10-minute chart it was because our rain line was still above us, and we've seen that now for a number of days. And that tells us once we get too far stretched, we can get the bounce. But you have to have this rotation understood right here, the slope line. And once we get back under the blue line, then it's lights out, and that's the umbrella pattern, and that thing is coming back to test support. And we never know exactly where it's going to hit. Overnight, I'd called this area based on our system pivot at 187.5 was an extreme level there. And I actually got up. I don't normally get up in the middle of the night, but I got up and I took a look, and and I said, these guys are trying to go back and they're going to try to run the stops. And then we should look for the reversal. And that's exactly what happened. And truthfully, 10, 15 years ago, I wouldn't have understood that. This business takes so much experience just to understand what they're trying to do. And they don't want the shorts to have position. So this is an attempt to run the stops and get the shorts out, but they peter out here, and then all of a sudden we've got, let's come back and let's test the lows, and even then some at the end of the day. So these charts are very important to me when we get a trend type move, and I can't live without them. I mean, they're just that important to me. And as you can see, I track my settles and the closes. And I want to keep track of those things. I want to understand when we're going to have an open gap that may get revisited and so on. So very important chart. And these ideas down here are important, but they're secondary to me. I half glance at these. The most important things are the slope lines and these type trades. All right, and here's our system pivots, and this is ready to go for Monday. Already know the prompts that we're looking for in the territories. And this big 17.5, obviously that 812 we've talked about up here. Once you understand the system, it gives you better insight into where the market may or may not go. And this is like a football field. And then the overlay really is the smaller time frames and even the larger ones. So already known overnight when this was plunging, step by step, this 421 area, 343s, and 265s. And this 187.5, we hit there, and I said, okay, that's it. cover. If you're short, cover. And the rest of it was history, just climbing back up this ladder, and could not get to this 578. That was our resistance right here. If anybody wanted to short, use a 10-point stop, but figure this is going to hold and not until we break that. That's resistance. And then we come back down step by step, step by step, and we come all the way back down, and this holds, and we bounce back that 343 area, and then lights out. So you can't make this stuff up. This is already set in stone, and then we adjust as the market moves. So already known are the levels. I don't make them up every day. I don't reinvent the wheel. That's why I keep saying traders that don't understand this system really are at a detriment. And that's why I think, 95% of traders are going to lose because you won't take the time, even if you are a guru, even if you are an expert, you won't take time to learn this stuff. And I've offered this stuff now for years to traders, and people say, what's that guy know? He's just an old guy, an old geezer. What's he know? So what? He spent 30 years in the business. But guess what? These are still going to be relevant 10 years from now and 20 years from now. And then until you take the time to learn it, you're always at a disadvantage. You're going to keep reinventing the wheel. Just my belief. And drilling down to a smaller time frame, like a 3-minute chart. This is an RTH chart, and we see the continuation under the blue slope line. We get the breakdown, 3-minute breakdown. Get one push above it, can't break the slope. Comes out the south side, and we start to get under. And this is the umbrella once again. We're underneath, obviously, the slope lines. We get one push right here, and this probably caught a lot of traders by surprise, thinking that that was it for the day, where we get above the blue line, but we still can take out the AVWAP. And then once we come right back down under it, your mind has to turn around and say, okay, it's still the umbrella trade. We are still coming south side. All right, and here's a 5-minute chart. Again, RTH values. Most traders are going to be trading RTH, not overnight. So very relevant to have these charts on. Obviously, you've got the sigmas on too. If that's too much, just take them off. But we notice with this chart, this 5-minute chart, we cannot get above the slope line. We cannot get above the AVWAP. That's why I look at a number of different charts to help guide whether we are long side or short. And it moves so fast in NASDAQ that you need multiple charts, in my opinion. So this is obviously a 5-minute RTH, but guess what? Click a button. As long as you freeze this, and that's the values you want to know where that is, and then you have other charts you're looking at for levels like we've showed you, but you can easily click on and go to things like a 30-second chart, which I use quite a bit now the last year or so, just because the NASDAQ moves so fast. And the idea with this, obviously, is you can't get caught, because if you get caught, I mean, you're going to find these runs, especially like end of day, these kind of 75, 80-point moves. And I put that with a couple of guys I was trading with. I said, hey, don't be a hero at the end of the day. They're going to run this thing 80 points one way or the other. Don't get caught and ruin a good day. And this is how I can see these. I'm looking at the same things I was showing on the other idea. If we get back up above this green and red and blue line, the slope line here, then we're looking to go and test the rain line. And if we get back under and stay under, you're still coming this way. So this is a very important idea. And I really can't say enough for using a fast chart if you're a day trader, because all you're looking for is these quick moves. If you can, in 15 minutes, 10 minutes, 5 minutes, if you can capture 50 points, why not? So, and the same principles are being applied here: green, red, blue, magenta, umbrella trade. Okay, we're back into it. And if you want to just a tad slower, go to a a 1-minute chart. So using this to not only teach myself, but anybody who's listening, look at this 1-minute chart, right? Timing chart in here. Come back under, we get back under, and then we go sideways into the close. So this stuff is valuable for those traders who want to take time to learn and integrate different time frames. It's as simple as that. Lunch contra, right? Get the lunch contra, boom, 2 o'clock comes, lunch is over, contra's over, sells off, rest of the day. This is not rocket scientist stuff. This is, do you have the discipline to create a system and follow it? And do you have the discipline to take the stop out when you're wrong? All right. End of the message. I hope anybody listening has a great weekend and can benefit from some of the things that I've put out here.